Silvergate stock crashes 40% in pre-market as FTX collapse impacts the bank. Coinbase is to pay $100 million to settle New York regulators' anti-money laundering complaints. NFT protocol collection creates a DEX for instant NFT trading. And NFT marketplace, Magic Eden, pledges to refund users who were sold fake NFTs in a massive exploit. And we discuss crypto market catalysts to look out for in 2023 that could potentially kickstart a bull run. Hello, everybody, and welcome to the Assets of Value podcast. Today and every day, we connect to give you our insights and perspectives on crypto, Web3, and NFT topics. On 5th of January, we are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. Thursday, nearly the end of the week. Abe, what are the markets looking like today?
Hey Shwab, wonderful day. Bitcoin is trading at the same range of 16.8k with a slight local top formation indicators, while altcoins are trading heavily against the favor. And we are seeing potential rise from Cardano and the interesting on-chain activities show up because stablecoin deposits in the exchanges are going up slowly. What it indicates is massive buying potential and buying power of whales. And whales usually do this when they anticipate a pump. This could suggest that a Bitcoin dump may be incoming, or we might see green shoots later in the year. As of now, although it's quite uncertain what the whales are planning for us, and we might see a potential green February if that's of any relief.
Abe, I'm going to have to delve a little bit deeper around this on chain activity that you mentioned. Is it an accumulation phase that we're seeing? Because if whales are moving in and buying up some tokens, are they accumulating? But you suggested that they could be buying to potentially relieve or dump again on the market. How do we read that activity and that behavior?
Interesting question. You can analyze that activity from stable coin deposits on chain data for centralized exchanges. Although this could indicate another thing, because as of now, the exchange FUD seems over, Binance is no longer under suspicion, FTX saga is almost over, OKX is stable, and Coinbase is regaining its market share. Thus, the whales could be thinking that maybe the exchanges are safe. Why don't we deposit our stable coins back into the exchange so that we can be prepared to buy the dump? That's one narrative. Although the second narrative and the popular narrative could be whales are not planning to buy anytime soon. They'll be accumulating slowly over the next 2 years.
Thanks for clarifying that. Yes, I'd agree. The focus of the FUDs against crypto exchanges seems to have gone away for the time being, and it looks like Binance was completely unaffected by such fear, uncertainty, and doubt. But not everything is happy and rosy in crypto land. Silvergate, the bank that actually lends against crypto, has seen its stock crash 40% in pre-market activity. This was heavily intertwined with FTX, and in order to honor customer deposits, it's having to not only face a $718 million loss, but it's also firing 40% of the staff. Do you think this is the first, and there could be more things from a negative perspective, specifically in Silvergate Bank, or do you think they've done enough to fix the liquidity issues that they were having?
I think Silvergate situation is a perfect message for all Web2 companies, big conglomerates. When you are greedy, you get punished. That's the message. And Silvergate tried to attempt to gain massive ROI by lending to FTX and SBF. The loans were under collateralized, there were no enough security, and the security what was deposited was essentially FTT tokens. The bank did a bad business and they are paying for it. A point to consider is that this event could ease some of the heat building from Web2 organizations against Web3 organizations because a bad actor acted against the system, fooled customers, and a bank where people deposited money paid him to do that, financed the whole process, although indirectly. Now, when another big firm like Binance, when Binance go for a loan, maybe to run their operations or maybe to widen their businesses, the de facto answer will be no. And it seems little disheartening, but I think it should be the way in every crypto winter. because as of now, I don't feel it's a window because as we discussed, Bong token has been pumping hard. It has pumped 110% other day, 100% yesterday, and almost 20% down today. When meme coins such as Bong pumps hard and simultaneously we see bad actors in Magic Eden, it signals something. It essentially conveys the message that the actual bear market hasn't even started yet.
Wow, what a statement to say that the bear market hasn't even started yet. That is worrying to say the least. I'm going to have to hold on tight if that's certainly the case. Let's move over to Coinbase. Now, I found this one to be interesting because they are paying $100 million to settle New York regulators' anti money laundering complaints. Now, you can read this two ways. One, the fact that they were doing something shady that borderlined money laundering. Or the second thing is this fee or penalty is so small compared to them and they just don't want the headache and are just paying it to actually let the problem go away. What's your opinion on this, and should American citizens be worried about Coinbase's actions in regards to this?
Crypto exchanges are usually scrutinized in accordance with anti money laundering laws. It's no surprise that Coinbase, such a large exchange based in America, has come under the same ambit of the law. While the attempt to clear out its name and build a reputation, maybe gain the reputation back, is a noteworthy attempt. And Coinbase has succeeded in that. $100 million in fines is not a small amount, but for Coinbase, paying such a penalty with such ease represent their liquidity. They are liquid and they proved it. I think this could work as a potential catalyst for investor confidence in Coinbase, and rightly so, Coinbase shares rose by more than 12% in a single day. In the bear market, shares of a centralized exchange, that too in stock market, rising 12% is extraordinary, and Coinbase rightly earned it. Funny thing is that if you check the increase in share, it is more than 100 million. So Coinbase has won the clever war, you could say.
Interesting take. Love it when you just provide your perspective on the situation. Let's talk NFTs quickly. New protocol called Collection creates a decentralized exchange for instant NFT trading. I don't know what to make of this. NFT Protocol Collection launched an NFT DEX protocol that allows users to create liquidity pools for NFTs that target specific criteria. Let's begin with what are liquidity pools, how they're created, and how this could potentially work in an NFT setting.
The first and foremost question that's raised by NFT holders and actors in the space is that how do we ensure liquidity for our assets? If you're holding a crypto, then you have the answer. You have DEXs, you have centralized exchanges. But for NFTs, it just still is P2P. That means to sell an NFT, you need to find a unique buyer. All this can be done pretty easily with X2Y2 and all other NFT platforms. The actual measure is yet to be in full shape, because when you are holding a massive NFT collection and there's no buyer at the same time, then you could be lowering your floor price, which could affect your ROI. Evidently, building an AMM for NFTs is the right way to go forward. So one might ask, what's a liquidity pool? A liquidity pool is a pool of assets. For example, a liquidity pool combines two or three assets that can be traded bidirectionally. In other words, if I have Ethereum and USDT in a liquidity pool, one can trade USDT for Ethereum and Ethereum for USDT simultaneously because there's enough capital and enough assets in the liquidity pool. And when somebody is building a liquidity pool with NFTs, that necessarily mean that they add their NFTs to the pool, get a percent of the fee back, and they get the desired currency back. For example, that could be Ethereum, that could be Solana. And yes, it is exciting to see such a movement, NFT AMM movement, because Sudo has tried it and they failed. And now we might see a Basie, Moonbird, Utes, everything in a single pool. And that will be amazing because that ensures instant liquidity. And that might solve most of the NFT collections problem. People will not be afraid to buy into NFTs. This is the biggest USP of such a move.
Let me chime in here with a couple of quick fire questions. If a holder is holding a Bored Ape Yacht Club NFT, and then you've got person two who's holding a Moonbird, and you've got a person three who's holding an Azuki, is there a trade between the Bored Ape Yacht Club holder and the Moonbird holder? Or are they trading from NFTs into some sort of currency dependent on the liquidity pool so that they can quickly release their asset, swap it for either ETH or USDT, or even swap it for a different type of NFT. So a Bored at Yacht Club swap for a Moonbird and an Azuki and a couple of leftover ETH. Is that such a trade doable?
It's doable and it's exciting. The actual mechanism depends on the type of liquidity pool that's created. If the liquidity pool contains Moonbirds, Azukis, and Bazy, then they can be interchangeably traded. If the liquidity pool also contains USDT and Ethereum, then you can sell your Azuki to USDT or Ethereum.
Definitely interesting movements there, decentralized as well. So let's move on to another related NFT story. This time, marketplace Magic Eden. They're pledging to refund users who were sold fake NFTs in the latest massive exploit with both Solana and Magic Eden again. So, yes, Magic Eden said it would refund any users that were affected by the exploit of the sale of fake NFTs. What we saw was NFT passed off as members of verified collection. So this took place yesterday on January the 4th, where a handful of reports came up saying that users were being shown unverified NFTs as part of a verified collection. So yeah, you could see the mix up there. It seems like it was an issue on the Solana blockchain with Magic Eden, and it's great to see Magic Eden coming out and supporting the ecosystem and the holders and anybody infected. Good work, Magic Eden. Right, we did mention we will circle back to look at some crypto catalysts for 2023. What could they be, Abe, as we are still within the first week of this new year?
The two major narratives in 2023 with Bitcoin, and that's the only two possible narratives with it in 2023 because we don't have a halving event. We are far from a bottoming process. We are far from minor capitulation. So, first narrative is adoption of Bitcoin as a legal tender. Countries, nations, and organizations could adopt Bitcoin as the de facto legal tender that will provide more common adoption with citizens, with banks, with governments, and everything. The second thing is the rise of Bitcoin as a reserve asset. We have mentioned somebody getting a patent in the name Bitcoin Bank of America, and this could be just a trigger. What this means is Bitcoin can be ready when it comes to institutional adoption. That means building reserves in banks, for governments, for companies, for corporate accounts. We know that Bitcoin is one of the best commodity available right now, after gold, of course. And building a Bitcoin reserve seems very likely in the next year, especially when it's so undervalued right now compared to last year.
So what you're saying is that there isn't much news or catalyst for a solid run of Bitcoin. Many technical analysts see that it could retrace from a charting perspective up to a fib 6.18 level. That takes us around $30,000 to $35,000 per Bitcoin for potentially a much lower leg down. It could play out, but I guess there's a big dependency on what the Federal Reserve will come out and position itself from a macro perspective. It seems like investors do expect the Fed to pause rate hikes in 2023, but we just never know. And on that note, I think it's a good place to wrap it up. As always, it's been super fun. I'm glad you're able to jam with us today. That's it. Until next time, thank you, everybody. We're signing off.